Good evening, all. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 25th of March. But disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts, and I'm not here to shoot trading signals. This is a video for paying subscribers at ctmthebiggerpicture.substack.com. It's published on YouTube after a delay of a week. All right, let's have a look at equities, which have been still rallying, but haven't actually reached the heights of the initial spike up. Partially that's because there doesn't seem to be any sign of peace breaking out. There was a 5-day pause announced on Monday that doesn't seem to stop anyone from bombing anyone. So the Iranians were still bombing their neighbors. Israel was still bombing Iran, and actually on Tuesday I saw some news that the Americans and the Americans and the Israelis had bombed both a desalinizer plant and a gas pipeline, which is kind of the sort of stuff that was going to be escalating the conflict. So not quite sure what's happening there. It does appear that everything the administration said on the subject isn't true, and the Iranians do not appear either to be talking or to have accepted any conditions. However, there are some peace talks being. There are some other Middle Eastern countries, led I think by Egypt, who are looking at putting together some talks, and the Iranians are talking to them. So who knows what might develop? But at the moment, as far as I'm concerned, there are no real indications that this war is coming to the end. But we are seeing a bit of a pause. On that pause, though, I wrote a couple of days ago a post. There is no I in TACO. And have a look at that if you haven't read it already. And what I was talking about there was the possibility we might see a rally for a couple of weeks. Obviously, I was saying that I wasn't sure there'd be any actual real significant pause in the war, but I think it's a good time for a break. And what I would say also is it's Easter week next week. And obviously, the Iranians don't celebrate that, but I would note that historically we've got Monday, Wednesday, and Thursday as historically bullish days, and Friday is, of course, a holiday, so we've got one neutral day on Tuesday. So it would be a great time to have a rally if a rally can be sustained into that. And I was talking in my post about the possibility we might be forming right shoulders on Dia and SPX. And that could set up the next move down if the war isn't going to end. Now, I've got more to say. I've got quite a lot more to say about war trades when we get to US dollar, but let's have a look at equities first. So we're seeing a bit of a rally here. NQ haven't reached that spike high yet either. RTY hasn't reached it either, but has got pretty close. YM hasn't reached it either, but got closer than SPX or NDX have managed. DAX has got slightly over it, but not much, to the extent that this actually could be a double top here. And ESDX the same, and slightly more. In terms of Nikkei, kind of looks like an inverted head and shoulders, but with an unusable neckline, really. But I am thinking this could be a bear flag, but ideally it would go a bit higher. Really, I'd love to see this last another few days and through next week until after Easter. We'll see whether it's got legs to do that, but that could give us some really nice patterns on the bigger picture. All right, let's have a look at those patterns. Now, I was going through these obviously in the in my post, but one thing to note here is we've got an RSI 5 buy signal fixed here on SPX. I think we've got another one on Dia, and we've got another one on IWM. We lost the divergence on SPX, but we could be forming possibly we reached the head and shoulder target. We got down to the low here on Friday, and we're still in the zone for a possible head and shoulder neckline. So I'm thinking we may be forming that. This would be greatly more. If we just failed directly from here, I think this would be too small. This would be too small as a right shoulder, but if we can keep it going for another week or so, or at least into the end of the week, then this would look a lot more credible. Although if it's going to be just into the end of the week, really we need to go significantly higher. Ideally, we'd be testing the daily middle band, which I've got at 67.23. Looking at Qs, again, I'd quite like to see a move to the Daily middle band, which is the obvious resistance at the moment, and is 599. We don't need to put a right shoulder on this because we've got a double top that's already broken down with the target in the 52328 to 52369 range, as IWM has also broken down as well. All right, Dire. Dire, we've seen a little rally off the low. Now I've got two necklines here, and we've reached the first one almost exactly. Again, if we broke down directly from here, this is too small really for both time and price for a right shoulder. But if we could, even if we didn't go up much more, that would look an awful lot better if we just took another week forming it. And if we can go higher, then we could spend less time forming it. So ideally looking for a test of the daily middle band in about the 472 to 473 area. Not really seeing anything. We've not been moving enough really to see anything on the 15-minute or hourly charts. All right, let's have a look at the IWM chart, and looking at the daily chart, we have already seen a test of the daily middle band, and that hasn't been as solid as support on IWM as it's been on the others, but it's concerning me because I really don't want IWM to be the strongest one here, and the reason for that is we've already got a head and shoulders which is broken down with a target in the 216 area, and if that, but that could fail, and it would fail if we saw a break over this right shoulder high, which I've got at, hang on, wait a second, 257.19. So we're getting uncomfortably close to that. I don't want to see it go over that. I don't really have, we could potentially be forming an alternate right shoulder, but we've already got a perfectly good right shoulder, and actually it would lower the quality of the head and shoulders if we did that. So I'm not keen to see that happen because at the moment we've got a prospect of getting all four indices with nice topping patterns to take us lower. So it would be annoying to lose the one on IWM. We have got, I would say though, a daily RSI 5 buy signal fixed here. That could easily reach the possible near miss target tomorrow. If we see a strong day. We saw a pretty strong day in IWM here, even if it was a little meh on the other ones. So looking at Dire again. Dire, how close are we to getting to the target there? We haven't even reached the 50 level on it, so this has been a lot weaker. We shall see how that goes. All right, looking at DAX and Nikkei. DAX, obviously we lost the buy signal there, but we're seeing a bit of a rally here. Ideally test the daily middle band as well. I've got that in the 23,646 area, but it's not as clearly defined a resistance level as it is on SPX, Dire, and on the Qs. Looking at Nikkei, we've actually got a possible double bottom here, but I think unless we see a freeing up of the straightforward moves, then it's very difficult to see this going up a great deal. We'll see that again looking at the daily middle band, which is at 54,976. All right, let's have a look at the dollar. Okay, not a lot to see on the well, we've got an obvious bull flag here, and I like it. And really, looking at this trend line here, this is kind of the obvious time for it to break up, although it might not break up quite yet. But I've got a lot more to say about this on the daily chart, and I'm working on a post which isn't out yet, but I'm expecting to be out tomorrow. But in terms of, hang on, wait a second. In terms of the others, there's not a lot to report on the other currencies here on the hourly chart, apart from on USD CAD, where we had a strange bear flag channel that didn't really fit with the dollar going up, so I was kind of hoping it would break, and it's broken. So that's good. So we've no longer got this, which would be a fairly strong indication of going lower. All right, let's have a look at these on the bigger picture charts, and let's do the dollar first. I've got a lot to say on the dollar. Now, obviously, we've got this bullish setup here, and like the oil setup where we had this big bullish thing, and I was looking around for reasons why it might play out, and then it's turned out to be wrong. We got another one here because one thing we've noticed when the war started was that the dollar went up, bonds went down, gold went down, but the dollar went up, and it's gone up not a huge amount, but some, and we got back up. We had the original double bottom here broke up, failed back into the lows, and I said we could break lower, but equally it could be a larger double bottom, and that larger double bottom has broken up with a target, the 104.572 to 105.239 range. Now, the question is there a prospect of this realistically getting back all the way back up here and playing out this bull flag setup and getting back up to 114.78? And my argument is going to be that yes, there is, because actually we've got a recent example, which is a good example. And I've done a chart on that today. I'll show that to you. Okay, this is a chart of basically the when the oil crisis in 2022, because I mentioned that we made an all-time high in 2022 on gas oil and heating oil, and we made lower highs on Brent and WTI against the 2008 high, but they weren't an awful lot lower. So there was a big oil spike, and that was about Ukraine. And Ukraine, this is where this black line is when Russia invades Ukraine on the 22nd of February 2022. We see a big spike up in oil, and then really it's a big issue for a few months, but we never quite reached that peak again. We never reached that peak again on the on oil, and then it's like fades away. And even though the war was continuing, we eventually got down to this year when we were bottoming out in about the 56 area, which is way down off the bottom of this chart. So now we had inflation that was already going on. That went up a bit, and inflation peaked in June at 9.1%. And then this is the dollar. And the dollar basically started spiking up when Ukraine invaded Russia, and then it continued going up, even when oil had peaked here, and it continued going up even when inflation had peaked here, and it actually doesn't stop going up until the end of September. That was a big move, and that was actually a move from, if you take it from when Russia invaded, I've got that in about the 95.5 area, and it made it all the way up to that target there in the 114.78 area. Now let's have a look at where we started this move here. And if you take this back a couple of weeks, this takes us back to beginning of March, basically, and we were at 97.5, and we've got up to 100.54 and pulled back slightly. Okay, let's say the war all goes to shit, which at the moment I'm not seeing any indication that it won't, and really it's hard to see a way out, a face-saving way out for the US at the moment that Trump would accept, because he's very sensitive about his pride. So what happens here? Well, if we follow the same track, this could easily get us up into that retest in the 114.78 area, because we actually covered greater distance to that high. And actually, the Iran war is actually considerably more serious. Why is the dollar going up? To be honest, I'm not sure. It's not about the oil necessarily. Maybe it's flight to safety in a crisis, but this is acting in a flight as a flight to safety in a way that bonds most definitely aren't, and precious metals aren't either. But this, looking back at this, is it credible that we could get to 114.78 retest? Yes. This potentially is a much more serious conflict in terms of oil prices and the impact on the world economy. And this has already done it on a lesser crisis. So yeah, I think that is credible. And I'm thinking that might be what we're about to play out, in which case, having got back up to about the 100 area on USD index, we'd be heading back up to about 115. And that is where this bullish setup should resolve to. No, not always it would, and you could see it break down. And to be honest, I was struggling. I wrote a post about in June last year when I was talking about this and looking for reasons and saying, well, actually, I couldn't really see any fundamental reasons why I'd be thinking this might actually play out, but I'd seen some pretty wild retests in my time, and this was strongly what this was suggesting. Also, we've also got a monthly RSI 5 buy signal fixed, and we've got 1, 2, 3, 4, 5. This is one that extended into a big one. We've got 5 of this on the chart, and they all made target. Of the sell signals, we got 1, 2, 3, 4, 5. they all made target too. Now they're a bit little less reliable on the RSI 14s, but the RSI 5 ones tend to be bankable. So I would one of my things I was one of the reasons I've been looking for um, reasons why this might make target is because actually historically, generally on this setup with the monthly buy signal, I'd expect it to. I'm thinking it might, and that's what my post is going to be about. Talking about the 2023 analog, 2022 analog, talking about the fact that there doesn't seem any easy way out of this war and it might well last quite a while and might have a very big impact on oil, and then talking about what US dollar would be likely to do while it was doing that. I'm thinking that's very credible. We'll see how that goes. I mean, and we've also got bear flag on EURUSD with a very nice looking potential level bottom, which is not broken down yet. And we've got another very nice looking bear flag on GBP USD with another nice looking level top that hasn't broken down yet. So, am I thinking the pattern setup is strongly favoring it? Yes. Do we have a monthly sell signal on GBP? No, but we do have one on the euro, and the euro is 57% of the US dollar index, and again, pretty strong track record historically. None of these monthly RSI 5 buy signals on either the US dollar or the euro have failed going back to 1998. So that's a pretty strong track record. In fact, in US dollar, that chart I'm looking at here, that goes back to 1980. And we've got 5, and none of them failed. And we've got actually 1, 2, 3, 4. So we've actually got on the monthly chart, sell signals, we've got 1, 2, 3, 4, 5, 6. We've got 7, and none of them failed. So 12 signals here, and none of them failed. Now, obviously, there's always a first time. But nonetheless, this is a pretty strong track record. And yes, here, that was a lower low, I think, which is why I haven't got that marked in as a sell signal there. Here, it was a higher high, but here it was a lower high. But, I mean, it's a pretty impressive track record. Do I think, and this is one reason I've been taking this so seriously, and I'm still taking it seriously. I'm writing about it. I really like it. USDJPY, not sure how comfortable I am at getting over 162. We might lose my very nice megaphone and topping pattern, but we'll see. I mean, USDJPY sometimes plows its own furrow anyway. USD CAD, which will tend to go up with the dollar, we've been stuck in a range for 10 years. This could break it out of it. And restly, this is the 2020. This is the I mean, when we saw that big high on the US dollar in 2022, this is what USD CAD was doing at the time, so that's not really correlated at all. It's not a big part of the US dollar index. It may not follow it, but there's nothing here saying it shouldn't deliver. In terms of Australian dollar, short term, we've got a nice looking little level top. It's small, but it's promising. We shall see. But Australian dollar and NZ aren't part of the US dollar index anyway, so we shall see. All right, so that's where I am on the dollar. Hang on, wait a second. Have I got anything open here? I'll just save that. I don't think there's anything else open that's of interest. I had to entirely recreate this chart today here because stock charts have changed the way that they switch over the chart. So I did something and managed to erase the weekly chart because they changed the way they do it. Slightly annoying. Anyway, let's have a look at the bonds. So let's have a look at ZB. ZB, this looks like it's forming a bear flag, and, well, I'm expecting it to go lower on the basis of the triangles I was talking about. Nothing really changed. In terms of ZN, we've got a 60-minute buy signal which has now fixed, and we will see how that goes. But we've got a potential level bottom here. But again, this could develop into a bear flag. And I'm leaning towards this going lower. It might be it doesn't go lower for a few days while equities are rallying, if they do manage to rally for a few days, which is what I would like them to do. But the market doesn't always always do what I wanted to. So we will see how it goes. Let's have a look at the bigger picture charts there. In terms of TYX, I would also note I don't have the it doesn't have the track record really, but we've got monthly sell signals fixed here. This one's reached possible near miss target, but we don't have the strong track record here that we've got on the US dollar chart, where they're really very, very reliable. But here, again, looking at a triangle and expecting it to go back to triangle resistance, and it's more of a rising wedge here really, but the obvious target is a retest of this high. And I've seen people talking about the fact that we're back at rates of 5%. My concern is not that we're back at 5%, but actually, if things really go south, we might head up to 10, because we've got these IHS patterns, and really, I'm wondering if they're going to break up. If this Iran war turns into a serious economic disaster, then I think that's probably going to happen. And I'll be planning to write another post as well, talking about what the effects of that would be. But one of the effects would be that the interest rate that paid by the US government would probably go up by $600 to $800 billion a year, which would have a very big impact, and is a total disaster scenario for the US at the moment with the current level of indebtedness. In terms of TNX, we're also looking at a big triangle. I'm looking for triangle resistance next. In terms of TLT, I think we're also looking at a triangle, and I'm looking for, ideally, well, as they go up, this would come down. So it's not as clear that this is the next target on the triangle on TLT, but nonetheless, I'm thinking that may well be the next target, and I've got that currently at about the 82.6 to 7 area. So we'll see how that goes on bonds, but I'm looking for downside after a rally here. And hopefully that rally can be sustained long enough to give me my head and not go so high that I lose the that the head and shoulders is already broken down on RTY, but goes high enough that I can get my right shoulder on SPX. All right, let's have a look at oil. Oil is trending sideways, mainly on the basis of hot air coming from the White House suggesting that the war might be over soon. I don't think that's likely to be the case. I think we've got a date with new all-time highs all round, and that's partially based on the pattern setup, but it's also partially based on looking at 2022 and comparing the depth of this crisis with 2022, and this is a lot more serious. In terms of HO, nice looking support trend line here. Not sure that's going to last, but again, we are trading sideways, waiting to see if we're going to see a retest of this high here, which I'm kind of expecting to see. RBOB has gone higher as well. Not made a new all-time high yet, I think. Well, I think we've made one on HO, and Brent crude, again, we are forming what looks like a bull flag, and I'm expecting to see a full retest of this high. We haven't seen a full retest of this high on Brent, which we just missed. We have seen retests of those highs on HO and RBOB, and CL has been a lot lower, and there's a good reason for that. CL is not as useful for an awful lot of things as Brent crude is. Brent crude is that is the grade of oil which is most at risk in the Persian Gulf. CL is actually, I think the majority of it's actually made in the States, and I think that's why it's holding up, because of course there's no real barrier to it being transported. So we'll see. But I think that's my theory. The other comment would be that there seems to be quite a wide discrepancy between the futures here and prices actually for oil being bought in the Persian Gulf, and that is likely to work its way out and push oil prices up as and when that plays out, unless peace breaks out, and you never know. But at the moment, I'm pretty doubtful. All right, looking at NG. We had a little buy signal here. It moved slightly off the bottom. But this NG does not appear to be affected by anything happening in the Persian Gulf here, in which case, and there's not much reason for this not to come back and retest this low, which is the obvious thing to happen after the IHS failed. So we will see. Hasn't quite made that yet, but it's not far away, and this buy signal playing out was not particularly impressive. All right, let's have a look at the oil chart. Now, the oil charts, I'm treating basically all of these as bull flags, these big wedges. Now, we had the initial patterns, double bottoms, the double bottom on Brent, played out to target, the double bottom on WTIC, played out to target. I think it was an IHS on heating oil, that made target, and gas oil, that also made target. So all of the initial patterns played out, but all of these can also be read as bull flags, and those bull flags have not made target. Now, the bull flag target on Brent would be retest this high here at 134.91, although I think there'd be a pretty good chance of making a good new all-time high afterwards. WTIC, I'm more doubtful, but we got pretty close to the bull flag target, which is a retest of this high at 126.42, and we will see. But I'm expecting to see that fully retested, and I think we might see a move up into the 147.27 area as well. In terms of do we actually have a pattern here? Yes. We've actually got this double bottom, which broke up years ago, and made the first target in 126.42, so I was pretty much disregarding it after that. But I am wondering, it had an extension target, which is back up at a retest of the all-time high. So we do have potentially some pattern support for getting back up there on CL, but I would only expect that to happen if things really go to hell, because CL, as it's mainly made in the States, isn't in much danger of being stopped. Heating oil, this was an all-time high in 2022, and it's already made a new all-time high and exceeded it. So in terms of the flags, this flag has made target. In terms of gas oil, the all-time high was at 412. This flag target is open. So that hasn't made target yet, and I'm thinking that's got a pretty good chance of making target. So I'm still looking for those targets unless peace breaks out in the Middle East, and at the moment I'm not seeing any indication to think that peace is about to break out in the Middle East. Okay, natural gas. Really, I mean, as moves go since the Iran war started, this has been very less than exciting. I'm not convinced this has got any impact on it. We actually had a little inverted head and shoulders that had formed here, and that's disappeared. I'm not seeing anything to suggest that there's anything to be concerned about here, which is good, because I didn't really have a decent pattern for this to go higher anyway. I did on all of the oils, but I didn't have one here. I think maybe that's because it wasn't going to go up. All right, let's have a look at metals. Okay, metals. I was talking about this being. It was kind of odd to see this falling with oil, but I think this is just doing what it was doing before, and this is forming a larger bear flag. I'm sorry, bull flag. So I think we've gone lower. I've got some trend lines which would be my ideal targets parked on the big charts, but I have to say, in terms of has it delivered a lower low? Yes. So we've got a possible flag there already. Exactly the same with silver, exactly the same with palladium, and exactly the same with platinum. So these could all be forming their bull flags, but we'll have a look at those to see how they're progressing and what they look like. In terms of this, we could be forming a right shoulder on an inverted head and shoulders. It's not a great IHS really. Again, it's got this sharply upsloping neckline where it's not a great pattern, but it is a possibility I'm looking at. We have a weak 6-minute sell signal fixed, and in the event that oil really starts moving up and messing everything up, then I'm kind of expecting this to go down. So we shall see. All right, let's have a look at those on the bigger picture charts. And right, looking at gold. Gold, I drew in an ideal flag support trend line, and we hit it. Slightly below it, in fact. Do we have a decent trend line formed where we hit it? Hang on, bear with me a second. Let's just have a quick look. First to see is whether we have, hang on, if it'll cooperate. Yeah, well. All right. Do we have a channel? And the answer to that is yes, we do. That is a bull flag channel. There's no particular reason to think this will go any lower. So we will see. But this is suggesting to me that actually we have reached the flag lows. We might see them retested, but they're not that likely to go lower. All right, silver. Did we make it? No. do we have a possible, a decent looking trend line that looks like it might be a real contender down at the support? And I have to say, having already found one on gold, it's not absolutely necessary to find one here. But yeah, I think we do. Bear with me a moment. Yeah, we do. All right, that is also a pretty decent looking bull flag. So I'm coming around to the view fairly rapidly that we don't need to see any lower here. In terms of palladium, I'd need to change the scale on this, but it's gone lower. Don't see why this would be an issue. And platinum as well. These things may be making their lows right now, and we may actually see, if we see further trouble in the Iran war, we may well see these going up. Now, it could be that we're going to see a much larger decline and that the bull market is over, but honestly, I don't see any particular indication that's likely to be the case, and I was kind of expecting it to go higher. Could we go lower anyway? Yes. What would be my natural direction, looking at the nice-looking bull flags on silver and gold? My direction naturally would be up. We shall see. All right, copper. Copper, the RSI 14 sell signal reached possible near miss target. We're seeing a little bit of a rally here off this level here, and you can see we see high here, high here, high here. So we do have a bit of a level here which we're testing, but I'm just thinking this is a rally. And certainly if we are going to see more trouble in the war, which honestly is what I'm expecting, then I would be leaning towards this, probably heading lower towards this trend line here, which is in the 425 area. All right, looking at GDX, we haven't made the RSI 14 sell signals, but honestly, I pay more attention to the RSI 5 ones, which have got a much better track record. Of the last three sell signals here, one of them made the full target. This one made the possible near miss target, and this one failed. So mixed bag. This one's made target. Maybe that's all we're going to get. In terms of the daily chart, we've got a double top that's broken down here. Now, I'd be in the event we are going to see gold go lower, or in the event that we see stocks go an awful lot lower, then we might make that target even if gold is going up. We will see. Another double top, not made target. Same comments apply. On GDX. In terms of the hourly charts, I was looking for a bit of a rally, and we've had a bit of a rally. We shall see. All right, great. Let's have a look at the other commodities. Okay, KC. All right, KC. This is looking less like a bear flag now, but I'm not seeing an obvious pattern for a bottom either. Keeping an open mind here, more to say about this on the daily chart. Sugar, we've seen a very nice move up here. We've got a 6-minute sell signal fixed. I'm looking for a bit more downside here. This could be as a bull flag is forming. CC, this looks like a move up and then a flag, so I'm kind of leaning towards seeing a retest this high here just under 3,500. Haven't seen much sign of that happening yet. CT, this looks like a bull flag, and it could be an ABC, form a larger bull flag and go a bit lower, or this goes straight back up to the high. Now, that brings me to another point, which is I'm going to be talking about the third set of patterns, which could play out because of the Iran war, and those are obviously on cotton, on wheat, and on corn. Possibly on soy too, but the pattern's not really there. It's on the other three. And I'm wondering if we are going to have an issue with the fertilizer coming out of the Gulf and food prices going up. I'm wondering if these are going to make targets, although cotton obviously isn't food, but it may be using the same fertilizer. In terms of lumber, we've seen a decline off the highs. It was sharp and fairly formless. I am wondering about a return to the lows. Overall, this is in a downtrend. Wheat, pretty good argument this is a bull flag or a bullish consolidation. On corn, pretty good argument this is also a bullish consolidation. On soy, I don't know. This is a double top. As I said, the patterns aren't the same on soy as they are on the other two. This is a double top. It's broken down. It's quite nice. This looks like a bear flag forming so far. So I'm wondering if the next thing we're going to do is see that play out. ZL, we've got a likely flag forming. Well, let's say the short-term part looks an awful lot like a bear flag. And I'm wondering whether this is going to retest this low and possibly go a bit lower and form an overall larger bull flag. Looking at live cattle, broken up from a bull flag, leaning towards this seeing a retest of the high next. Am I wondering if HE needs to go any lower? No, I'm not. This has now gone significantly below this low here, so we've got A, B, C. This is actually a pretty decent looking bull flag. I haven't drawn in the overall trend lines here, but it's nice. I'm waiting for this trend line here to break up. I think this is on the way back to a retest of this high here in about the 112 area. All right, great. Let's have a look at the bigger picture. All right, on those. Now, coffee. We've reached a big support level here. Obviously, we had this high here. We had this low. We're bouncing off it so far, and we're bouncing off it pretty strongly. We don't have anything on in terms of signals on the daily chart, and the RSI 5.1 we had on the on the weekly chart, and the RSI 5 buy signal we had on the daily chart has already made target. So we do have, I was looking at this, we do have an IHS which is broken up here with a target in about 3.32 area. That's what I'm leaning towards seeing made next. Looking at sugar, bigger picture, we've got this big head and shoulders with a target down in the 9 area. It would need to get up to 23.71, i.e. a lot more than 50% up from here. Well, a bit more than 50% up from here, to invalidate that. So I'm not really expecting an invalidation anytime soon, but I am thinking we've got a decent looking rally here. We do have an RSI 5 buy signal, which is trying to fix here. We've got an RSI 14 sell signal that's reached the possible near miss target. There is some support here. We might see a sizable rally, in which case I'd be looking for potentially a bottoming pattern here to form here. In terms of the weekly chart, we've got a weak RSI 14 buy signal fixed. In terms of the daily chart, no decent, really good pattern here. I'd be thinking this is I could argue this is a double bottom, but it doesn't look good enough to really be used as one at the moment. I'm watching this declining resistance trend line here, and I'm wondering if we might get up into the 17 area and then pull back to form a right shoulder, which could give us a decent IHS if we're going to get one to go higher. Looking at cocoa, we got down into the 3,000 area. We've seen a bit of a rally. Not sure it's got a lot of legs. We still do have a weak RSI 14 buy signal fixed. I don't have anything resembling a bottoming pattern here at the moment, but it could be that we'd go higher and form one. We shall see. This has come down an awful long way, and it could be that it's time to see a decent rally. And so far, the rally we've seen, in terms of the amount we've come down and the timing we've come down, so far this rally hasn't even moved the needle off the bottom. So if we're going to see a rally, I would have thought we'll see some more bottoming action and go up from there. Now, in terms of the patterns that might play out because of oil, obviously we had a set of big patterns that I was wondering what could make them play out, and it was Iran, and those were on the oils. Then we've got the US dollar, which again may play out because of Iran. Here we have another pattern which may play out because of Iran. This is a big decline. This is a very nice looking double bottom. We spent the last year just basically trading sideways. I'm thinking this might play out if this crisis intensifies, and that maybe we can get back up to this target, which is in about the 89.5 area. Oh no, the target would be in the 87.62 to 88.13 area. Looking at wheat, again, double bottom, hasn't quite broken up yet. This would have a target in the 739 to 742 area. And on corn, big double bottom, this would have a target in the 624 to 640.25 range. I'm thinking these may all make target on the Iran war. We shall see. All right, looking at lumber. Lumber, overall, this still looks like a bear flag, and I'm still expecting it to break down in due course, possibly within our lifetimes, and make this target here in the 352.5 area. We've been waiting a while for that. In terms of soy, I haven't really got a pattern here. We could be forming a right shoulder, IHS right shoulder, and if we went lower on that little level top that has broken down, then that could get us a right shoulder on this, and then we would have a reversal pattern, which could then deliver. Don't know if that's going to happen, but we could be forming the right shoulder on that now, and that could give us the bottoming pattern to match the others on corn and wheat and cotton, which already have very clear bottoming patterns, which may well play out. We shall see. All right, great. Let's have a look at crypto. Okay, looking at crypto. Not a lot to announce really in terms of the flags. Not much has changed since Sunday, except that we've got little IHS patterns which are forming. Haven't broken up yet on Bitcoin or on Ethereum, but this could get us back up into a retest of this high. This retest of this high, I'm thinking this can happen while equities are running over the next few days, and then we would set up a nice double top, which could then get us back into the lows. This one would be slightly oversized, but not unduly so. I like it. It's nice. All right, looking at Ethereum. Ethereum, we've got again, a little level bottom, sorry, a little IHS. It is broken up. It's got a target almost exactly at the retest this high here at 23.85. And again, it could set up a nice looking double top, which could then take us down. Because what I'm thinking is equities rally for a few days. It becomes clear that peace isn't going to happen. And then everything goes down. Equities go down, take crypto with it. But in the meantime, we could get back up to this high, set up a nice looking little double top. It would be a nice setup. Looking at Solana, again, little IHS, it's broken up with a target at a retest of 97.66. And we can set up a nice looking double top. This is a pretty sweet setup, and I don't know if it's going to play out, but the Solana one, it hasn't really followed through yet, but it's broken up already. I'd love to see these make targets, form double tops, and then be ready for a retest of the lows as equities go down. We shall see how that develops. All right, great. In that case, I think that's a wrap. Everyone take care. I'll catch you guys again on Sunday. All right, cheers.